talk a little Bed Bath & Beyond, declaring Chapter 11 bankruptcy yesterday following years of steep losses and several failed turnaround attempts. Joining us now to discuss more are Yahoo Finance's Brian Sazi and Yahoo Finance's Josh Schaefer. Gentlemen, thanks so much for joining here on the desk this morning. You've been writing about this, both of you, this in one way or another over the course of this weekend. Josh, when you think about what was put within this filing, what did you discover?
Yeah, Brad. So the first things that stick out, obviously, is what's going to happen to the stores, right? And is Bed Bath & Beyond still going to be open? The answer is, for now, yes. So Bed Bath & Beyond and Bye Bye Baby, they're going to be winding down 360 Bed Bath & Beyond stores and 120 Bye Bye Baby stores over the next 2 months. Those closures start on Wednesday. So for the next 2 days, it's technically still operating as a normal business. You can go and use your coupons. And then on Wednesday, the closures start, and you're going to see those kind of going out of business style sales. Brad, as you pointed to,
wow. So if you look at the video I just showed here, Bed Bath & Beyond, or should I say Bed Bath & Bankruptcy, has certainly taken its final vow. But what brought this on? Why is Bed Bath & Beyond filing for Chapter 11 bankruptcy? Today we're going to go over that. We're going to go over a couple of the reasons why Bed Bath & Beyond is now trading at all-time lows, and as of today just got delisted from the New York Stock Exchange. One of the things that Bed Bath & Beyond was unable to do, or unable to understand or ascertain, was the shift into e-commerce, slower foot traffic in the stores, bad debt, and then mismanagement. So for those of you who don't know, Bed Bath & Beyond actually started in 1971, and it eventually went public in 1992. It did reach $79.32 back in 2013, which if I go over to the stock, if I go over to Google Finance here and look at Bed Bath & Beyond, over the last, when they did go public back in 92, the article references, yeah, they were $79.32. But unlike some of the other brick and mortar retailers, it was plagued with layoffs, financial woes in the following years. Obviously, in 2019, it did report its first annual sales decline. In an interview, the CEO, or the co-founder, Warren Eisenberg, admitted that the brand was slow to adopt e-commerce, online shopping, said it missed the boat. So that was 2019. If I go back and look at the stock here from 2019 on, you'll see that 2019 actually wasn't that bad for them. They did experience a decline. But as the pandemic started to rage on and customers were stuck at home, they were buying more from online retailers like Walmart and Amazon, Bed Bath & Beyond actually didn't do too bad. So if I look over here on this chart, you'll see even as COVID started to hit, yeah, it took a hit like everything else, but it actually rebounded. And by the end of 22, it was up from $25 a share to start the year from 15. So you actually made money in 2000 if you had been trading in and out of Bed Bath & Beyond. But I mentioned a couple things. One, slower foot traffic in the stores. So if I go over here, there's an article from Forbes here. It talks about what happened. So they did file Chapter 11 bankruptcy in New Jersey on Sunday of this week. This video is being recorded on April 25th. So we're 2 days after their Chapter 11 filing in New Jersey. They did receive $240 million from Sixth Street Specialty Lending, which is to keep the website and everything operating appropriately. And then earlier this month, the stock did fall to a low of 31 cents. I'm going to go back here. It's actually fallen below that. So if I go over the last month, it's actually up. So this was 46 cents last week, and it's actually just continued to crater the entire time. A lot of that's due to the fact that they, again, Sunday they filed bankruptcy. Today's the 25th. So when the stock opened, Friday it closed at 29 cents, and when it opened on Monday, it was 19 cents. So again, it just clearly cratered. So I'm gonna go back to this article. It talks about, again, some of the things I went over. When it was founded, what's going on. Bed Bath & Beyond announced hundreds of store closures in recent months, part of its bid to keep the business alive. And really, they're just running on life support right now. I mean, that's all they can do, right? If you think about Amazon, you think about Walmart, you think about some of the other retailers that do that are in-home goods like that. Amazon and Walmart comprise so much of what we use today. Now, again, I'm a big Amazon Prime person. I'm a big Walmart person. I use both kind of in tandem. Just kind of depends on what I'm buying. But I like to use both to kind of play each other off and see what that looks like. But at one point, they did have 1,500 stores. That was how many retail chains they had at one point. If I move over to this other article, though, people in Bed Bath & Beyond shoppers in New York City were devastated after they filed for bankruptcy Sunday. Not really sure why, other than the fact that people were, able to walk to those stores and have some increased foot traffic. But it's really no surprise why Bed Bath & Beyond has, sort of went the way of Blockbuster and some of the others that failed to get into the e-commerce push and move forward. If I look here, somebody said I'm devastated. According to the Post, it was looking to hoard and stock up on whatever he can from before the store shuts down. I do want to make a note that the store is staying open until the end of May to make sure that people can use coupons and gift cards, etc. And basically, he's saying, what are the children next generation going to do? Like, it's Amazon, that's it. Yeah, it really is. It's It's Amazon, it's Walmart. There may be some retailers that you see locally wherever you live, but it's just unfortunately these big box retailers that without the web presence are going to start going again more of the way of a Blockbuster. The second thing besides the foot traffic and e-commerce was just bad management. Over the last 2 or 3 years, their management structure hasn't been ran very well. As you can see, again, I'm going to go back and reference the chart here. So for the last 5 years, you've noticed that their stock was up to about $31 a share in June of 21, and then it's just continually cratered. But why is that? So they've missed earnings. They've missed guidance. So, back in June of 22, and look here, they did out their CEO. I'm going to open up this article here and we're going to go over it just for a second. But yeah, Bed Bath & Beyond shares sink after it outs their CEO with wider than expected quarterly losses. So you can't continue to miss your number as a CEO. At some point, the board and the shareholders are going to say, hey, enough's enough. But I really don't blame their CEO for this. It's really, really difficult to, take on a failing retailer and make it thrive in the Amazon era. Sorry. If you look here, back, so they lost their CEO back in June. They appointed a new CEO back in October 25th. Unfortunately, it's sort of little bit too late. We move into February of this year, and we had an analyst call that downgraded the stock. So analyst their capital raise, Wedbush analyst Sam Bashman, they cut their price target to zero from $1. So basically saying the company's worth zero. And that's exactly where the company's headed right now. Actually, it's trading at 20 cents, which is actually remarkable. In the last week, it's down 51%. So when I say Bed Bath and bankrupt, this company is going to go to $0 unless they can get some kind of capital infusion and sell off the pieces. But yeah, Bed Bath & Beyond, they sank, and this was back in June. They missed their quarterlies. They just absolutely sank. So I'm going to move over here. This is today. This came out. So Bed Bath & Beyond has received a delisting notice from the NASDAQ. Tuesday, they announced that the listing qualifications department of the NASDAQ delisted the company. The company was trading in common stock would be suspended. The company's also announcing the cancellation of its previously announced special meeting of shareholders. All these things tell me that Chapter 11 was needed and that there's probably no way out for the company, at least from a profitability standpoint. What I see happening is pieces of it get sold off. You'll probably see some of the C-suite get bonuses and payouts. That's just how things work. And then you'll see, unfortunately, and I hate to say this, but you will see a lot of people laid off and let go just simply because there's no way to absorb those people anywhere else. Bed Bath & Beyond and Bye Bye Baby, those companies together, again, just don't have anywhere else to go. So the products will probably be sold off. The stock will probably, my guess is, go back to zero. Or again, it's trading, today it was trading all the way down at 12 cents in after hours trading, and then it went back up a little bit in the after hours. But unfortunately, there's just not much more that can be done. In the last year, it's went from 18 cents to $30. Market cap was into the billions, and now it's 94 million. There's just unfortunately not a lot to do here. If I go down to the quarterlies, or sorry, if I look at the annual over the year, revenue just continues to slide. So if you look back in 2018, they had 12.35 billion in revenue, and now they're down to 7.87 billion. Net income is actually continue to be negative, which is not necessarily a huge deal. But if you look here, their net profit margin is down negative 336% year over year. So they're not making any profit. They have extreme amounts of debt, and they're unable to pay their lenders, to potentially pay their rent. And I'm sure the interest on some of their debt, whether it's privately held, has got to be into the double digits. So when you're constantly running in debt, and I've mentioned this before on my channel, when you're not paying off high interest debt, debt is okay. I'm not saying debt's wrong, and companies need debt to function. But when you're not paying off high interest debt, you're continuing to borrow, you're not showing a profit like they are here. They're showing a negative profit. They have negative earnings per share. Their EBITDA actually, for over 22, actually not terrible. EBITDA means earnings before interest, tax, deductions, and assets. If I go down here and look at their cash flow, though, God, it's just, 22 was just horrible for them. So they were actually positive net cash flow, 383 million, and they're down almost $1 billion in net cash flow. And that does come from a couple of things. Again, they're just being tranched by Amazon and Walmart. They have no web strategy, really. They make up a lot of those 20% coupons. I'm sure you've seen those. They make up a lot of their store traffic from driving people in, from seeing those 20% revenue. I mean, they drive a lot of business out of that. And that's great. It gets people in the door. But in order to recoup the 20% markdown from an item, they've got to sell a lot of quantity. And quantity, unfortunately, if you're not online or you don't have a web presence, and a really good return policy and a 2-day like Amazon or Walmart does, you're just not going to compete. I mean, I look at myself, for instance, if I need something, the first place I'm going is Amazon or Walmart on my phone. I'm not going to drive to a Bed Bath & Beyond to look for something unless it has an extremely deep discount and I'm able to see it, beforehand. Again, it's really hard to come back and say, hey, there's one thing that could have been done. I think this goes back to, kind of the Blockbuster. They thought, hey, this can't happen to us. Netflix came in, started selling DVDs. They said, nah, don't worry about it. Push it to the side. Before you knew it, Netflix is a, 10, 15, $20 billion company with double-digit revenue and triple-digit growth patterns year over year. So there's unfortunately not a lot that can be said about what's going on. I really do. I do feel bad for all the people that are working there, that are going to be let go. I just don't see a way. To come out of it. On the other side, though, from a stock perspective, what do I think about the stock? Well, I know that the short position in Bed Bath & Beyond has yielded billions in the last couple days. If you look, if you took out a short position on this over the last 5 days, they're down almost 52% in the last 5 days. So if you bet against Bed Bath & Beyond in this case, where they were 55 cents a few days ago, they're down. Their stock's been cut in almost half. So you could have made a lot of money. I'm not advising people start taking up options to start trading on companies that they think are going to go to bankruptcy in Chapter 11. I would never advise that unless you really know what you're doing and you understand the risks as a short play or a short squeeze. The stock goes the other way, it runs up to infinity, and those margin calls can be big. On the plus side, or on the other side though, from a position of the stock and going down, the further down it goes, the more money they make. And really, I do see other retailers, falling into this. This is a company that, if I go out to their website and look, they've already started posting that basically they're done. Thank you to our loyal customers. We made the difficult decision to start winding down. And now they're offering extreme discounts on their page, for those that can continue to shop and stay relevant. So let me know in the comment section what you think. Do you think Bed Bath & Beyond is going to come back? What do you think about the debt? What do you think about the creditors? What do you think about their non-existent website or non-existent web strategy from a mobile perspective? How late were they in the game? And as always, if you like this content, please go ahead and smash the subscribe button. Give me a like on the video. That really helps the algorithm. And until next time, don't forget to design your financial freedom. Take care. Bye-bye.